Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Hope everybody's having a fantastic morning so far. I'm looking forward to some awesome trading this morning. Should be pretty good. Let's go through our disclaimer. As always, I need to remind you guys about the risks involved in the market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account. So make sure that you're going through that process each and every time. Let's go take a look at the news this morning. I know there was a CAD rate statement. We shouldn't even be trading the CAD for the banker's close, but that's it. Any other news that I'm missing? Um, Made up news. Okay, yeah, it doesn't like nothing that's like gonna affect us today. Okay, so let's go take a look at the some of our favorite pairs, right? I'm gonna go check, let's see the euro pound. Let's see how this guy is doing on a 5 minute. Okay, it looks like we're starting to come into a zone and a lower Bollinger Band, which is good. Let's see the euro franc. Not right now. Looks like it was at a zone about 30 minutes ago, but that wouldn't have been in the banker's close hour. So I'm going to leave that one alone for now. Let's look at the pound franc. Let's see how that one's doing. It's not currently at a spot where we would be interested yet, but it's close, right? I would probably be interested most in this euro pound. Well, it just depends. What I like over here on the euro pound is this is a solid zone right here. So is this, and so is this. Like you've got some really good areas of demand. So if the market came into these areas, you'd have, I would say, a pretty good chance of a move back up, and that's pretty much this whole area. Um, Um, yeah, that all looks pretty good to me. And then let's look at the higher time frame. I know this currency pair is on the down on the higher time frame, but it's been hitting a lot of multi-week support. So it does make me think that there's a little something here to work with. Let's see, if this thing came down, how far would this go? Well, that's only 20 pips. That's not too bad if this trade went against us. So I may end up just going with this pair. I may even just, for the kicks and giggles, just for kicks and giggles, just kind of take a trade or two. Let me go ahead and make sure my lot size and everything's all situated. And I'm just going to grab a couple of positions on here. I do like this pair. I've had a lot of success with it recently in regard to the banker's close. So I'm going to go ahead and add a couple of positions in there. A little bit smaller than my general starter position, just because technically it hasn't really set up yet the way I like it to set up. So I am going to go just a little bit light on this one. Okay, and then what else do I need to do with that? Oh yeah, I'm just going to remove this. Okay, so, but otherwise it looks like a good banker's close setup. I do like it, especially if it pulls back into kind of these areas down here. I definitely would want to buy more. That's why I'm saying I'm not putting a huge position in just yet, because I do think it's possible that this thing would or could come down lower. And so I want to be ready for that. And I don't want to have such a large position that if this thing came down, I couldn't afford to stay in the trade, if that makes sense. We've got to be able to just keep adding to the position into these levels. If the market came below this major wick here, I would have some concern, to be honest. That's where my level of concern would rise. So that's probably where I would stop out of the banker's close today, if that were to be the case. But I do believe we have quite a bit of support and help here. There's no news as far as I was aware. Checking this here, I didn't see anything in terms of the euro and the pound that's major. And yeah, the CAD did exactly as expected, just raised the rates to 4.25 from 3.75. I don't see anything that's I don't see anything that would cause the euro or the pound to really move. So, okay. So yeah, we'll stick with that one. I do want to be clear. I do think it's very possible that this thing comes into here or here before we get that move up. So don't be surprised if it does, come into here, because that's part of my trade plan. And I want you in on the same trade plan. Um, and that's also why my position's not as generally as large as I start out. It's because I do think there's a possibility of a pullback that's a little bit greater than what we've seen so far. So I just want you to be aware of that. Okay, so with that in mind, let's see, another thing that I do when I'm doing the banker's close, because I'm also trading it on my other account. I think I've shown you guys this before, but I have this counter. I have this app on my phone that allows me to count how many trades I have on. So I have a max rule that I won't take more than 20 trades, or basically 20 contracts. So 20 lots on the banker's close. So I already have on my other account, I have 5 trades on. So I just have this counter because sometimes it's hard to keep track of how many trades I've added. So my max position size is 20 contracts, as I'm building into some of these ideal areas. But I need to be aware of that because, by the time I get down into here, I'd probably be getting pretty close to my max position size. And, I don't want to be wondering, like, do I have 30 trades on, or do I have 15 on, or is it 20? Like I need to know that, because it's kind of at that point it's becoming a larger trade. And I have factored in, for me personally, I have factored in what the loss would be if I had 20 contracts, and it's something I'm willing to work with. Um, by the time I got to that point, but I'm not willing to add 30 or 40 or 50 trades. That leverage at that point is just far too great, and I couldn't handle that. And so, I just challenge you guys to do the same thing. That's why I put my disclaimer out the front is, you got to calculate what is your max position size. So when I'm trading the euro pound or the euro franc, my max stop loss is 40 pips, and that's on every trade I take. So, like, for example, these initial trades, I just personally can't go past this level. I can't go 40 pips past 40 pips. Now, what's nice is if I add to some trades down in here or in here, which I do think the market probably will go to those levels. Honestly, I'm just the way I'm looking at the charts and the price action. I do think it's very, very possible that it actually hits some of these order blocks before it goes up. When I put in a trade, say down here, that's going to put my stop loss on that trade 40 pips away. So it's not like I have a stationary stop loss for every single trade. Although sometimes I will do it that way. In all likelihood, that trade is just going to have, the trade down here is going to have its own 40 pip stop loss, because I factored in on my own risk management. I've said, okay, hey, if I have 20 trades, I can afford a 40 pip stop loss on each of the 20 trades. Sure, it's a pretty big loss. Like, it wouldn't be a fun day, but it's still within, like, it's less than a 5% total day risk. Like, I think it's around 4% on the banker's close. I almost never hit that loss, just to be clear. Like, that would be, it's not the end of the world, but yeah, it is a bigger loss than what most people would say. Like, when I'm taking my swing trades, a lot of the times the stop loss I take is like a 1 to 1.5% risk total. And it's just a single order. And on that one trade, the max risk is 1%, maybe max 1.5% risk. Since this is a conglomerate of trades, and I've traded this every day for a long time now, I kind of have a feel for how the market performs, especially if there isn't any news. So I kind of know what the generally accepted market range would be. And that's kind of where that 40 pips comes into play. It's because that's from my experience, that's the most I've ever seen a market go against me, at least on the euro pound or euro franc. It's about 60 on the pound franc, so it widens a little bit. But yeah, anyway, it's kind of a feel, if that makes sense. Like on the banker's close, you trade it so often, you kind of get a feel for it. Plus, I think I mentioned about a month ago that I did a formal back testing. Like I went back and found out, okay, over the last several months, what's the biggest drawdown from the initial signal of a banker's close trade? Like how far does the euro pound go against you when that's the only trade you take? And like from the initial signal that you took the trade, oh, the euro pound goes against you about 40, euro franc's about the same. On the pound franc, it's about 60 pips. So since it's 60 on that one, you can either, just take that same stop loss, or you can widen it to 60 and then just take fewer trades to make that risk the same. Anyway, just some thoughts, some risk management thoughts there. Real quickly, I just wanted to see how the other pairs are doing. Like I wanted to see how the pound franc, okay, so it came up to there and it's starting to pull back now. So that would have been a sell, which is the same thing as us buying the euro pound. So we're basically in that same trade right now. We're basically selling this because we're buying the euro pound. How's the euro franc at this point? It's still not in a signal setup. It's in the middle of the Bollinger Band. That's really not an opportunity. And just to be clear, for those of you that are watching live or those of you watching in the recording, when you're trading the banker's close, there's some absolute rules. In fact, fun thing here, guys, you might really enjoy this. I put together, where is it? It's where is it? Is it in strategies? Here it is. Yeah. So I think I made this, yeah, I made this earlier last month, the beginning of last month. I made some formal rules to the banker's close strategy. So I'm sure you guys will want this. Let's see, I'm trying to think, can I upload stuff to the chat here? Let me see, can I um, oh, it looks like I can. I think I found a way to do this. Let me try this real quick, guys. So I'm going to go ahead and make a copy as a PDF, download as a PDF. And then I think I can upload this. I've never done this before, so hang with me just here. I think I can put this in the chat box. Okay, let's go here. Let's go to this, I think. Let's see. Libraries. No. Desktop. This PC maybe. Downloads. Yeah, London Makers Close strategy rules open. Okay, I put that in the chat box. Let me know if you guys can download that PDF. I've never done that before, so I'm hoping that worked out. Just give me a little Y or a yes there. Just let me know if that worked to put the, and for those of you on YouTube watching the recording, or those of you just watching the recording on my website, if you want to just shoot me an email to steve@tradingwithsteve.com, I can send that to you as well. So you can have these specific rules here, which is super awesome. Real quickly, it looks like our trade moved up in our favor, which is good. Just a little bit here. Hasn't done much yet, so I'm going to let that keep going. I guess it's basically just covered spread and a little bit, but I thought it did more. That's fine. Anyway, we'll let that continue to do its thing. Okay, awesome. So in fact, real quickly, I'd like to kind of just generally go over some of these rules for those of you that are kind of newer to the banker's close strategy. I'm actually going to rename this too. I think I'm going to call it London's Bankers Close Strategy Rules. And then I think another name I want to call it is the retirement trade. Um, I'll tell you why I'm going to call this the retirement trade. Um, so let me talk about kind of how this works first, and you'll see why I think that's a good nickname for it. So basically, at the end of the day, banks need to reconcile positions, margin calls, and other trades before the end of the trading day. Bankers will often try to bring the market to a mean if an extreme low or high is formed, assuming there's no news to justify the move. So basically, at the end of the trading day, London has all these multinational banks that trade, and they have, like I said, these big calls that they need to fill in. They need to close out positions before the end of the trading day. And so wherever, if the market's been going up, then often it'll try to come back to a mean, or if it's been going down, it'll try to come back to a mean as well. And that mean is subjective unless you know kind of what you're looking for. And that's where the Bollinger Bands come in, as well as the entry. And I'll teach you kind of how that looks. But basically, you want to trade three different pairs, or anything with the euro, franc, or pound will do. But I think the three that you want to focus on is the euro franc, the euro pound, or pound franc. And these are the ones that we've made all of our money with over the last several months. We've only been trading these three. Um, unless there's been news with these guys, and then we'll try to go to a different pair. But always we're trading these three. And again, why do we trade these three? It's because these are the guys that are most associated with the European close, the London close specifically. And I guess Brussels also closes an hour earlier, so you have that kind of affecting the market too. But it's mainly the London close, which when is that? London close is at 12 p.m. Eastern, noon Eastern. Just never forget that it's at noon Eastern. For those of you that you live in the United States, that's an easy thing to remember. Noon Eastern, then you just figure out your time zone after that. For me, I'm in Mountain, so that's 2 hours in front of me. So the London market closes at 10 a.m. my time. And you're looking for a trade opportunity within 1 hour of that market closing. So you're looking for a break to the lower Bollinger Band, or a puncture in the lower Bollinger Band on a 5-minute chart, or a break in the upper Bollinger Band on a 5-minute chart. If there's no news within the last 12 hours or 12 hours coming, and you get that break in the upper lower Bollinger Band, you execute a trade in the opposite direction. And then if the trade kind of scales against you a little bit, I've learned to just add to that position. And I talked about earlier how I do that and what I'm willing to do and stuff like that. So yeah, execute a buy. We talked about that. Only trade pairs without news. Yeah, and then I add to the position. And this right here, you guys have to decide how you want to do that. You guys can certainly watch me, and I'll give you pointers on how I do it. And then it's up to you guys how you want to go about doing that. So, and then you take your profit when the mid Bollinger Band is hit, or when the price returns back to the original signal opportunity. So sometimes that happens where, like, if you look at our trade today, like let's say this is the original signal. We got an entry right here. To be honest, I got in a little early though. So let's say this market goes against us and it goes all the way down to here and then returns back up. Hopefully you've added to some positions down here, and then when it comes back up, you can close out the original trades at break even, and then you'll make your profits from the other trades that you added down here. That's kind of the concept in a nutshell. Let's see, add to the position if the signal strengthens, and then take profit. Yeah, and then use a fourth of the average daily range as your stop loss, which you can find on maytaf.net. You can go to Forex volatility from Maytaf, which I can put this link in the chat box for those that want it. This is if you have to leave the trade alone. So I usually do a 40 pip stop loss. But like, if I'm trading the euro pound, you can come up here and find out what the end of day or I guess the volatility is by day of the week. And you can see here on Wednesdays, the euro pound has a 73.6 pip average daily range. So what you do is you just take a calculator and you take that average daily range of 73.6, we'll just say 74 divided by 4 because we're doing it into fourths. And that means your stop loss would be approximately 19 pips or something like that. And so that's perfectly fine too. And that's probably honestly the best way to do it because it's the least amount of risk. So like if we were in this trade right here and we wanted to put in our stop loss at the end of the trading day, like if you had to leave your computer, let's put it this way. If you couldn't manage the trade, let's say you had a job to do, or kids are screaming at you and you got to take care of it. I don't know, whatever it is, life happens, you have to leave the trade alone. What I would recommend is that you use this stop loss method, which is on the this I told you right here, a fourth of the average daily range. How do you find that? You go to the Maytaf site, find out what the average daily range is, divide it by 4, and then that would be your stop loss, right? And that's what you would use if you had to leave the trade alone. Looks like it's moved in our, we had a little break in our favor. Let's see if it follows through and goes up here. Got a couple of trades in our direction. It's fun. Like over here, this is obviously a smaller funded account that I have. Obviously my FTMO account's more exciting, right? Like I'm up $200 on this trade right here, just on 5 initial positions. And then obviously, that's exciting because it's just, obviously trading with more capital matters, right? That's why I would recommend, once you guys feel like you're comfortable with the banker's close or comfortable with some of the other strategies I teach, definitely try out for a FTMO challenge or like a try out for an FTMO challenge or like my Forex funds, some kind of prop firm challenge, because the opportunities are there to get capital. Don't think that you have to save up, $10,000, $20,000 to trade or borrow $20,000 to trade. I wouldn't recommend that. In all honesty, places will give you money to trade if you're good enough. So our job is to make you good enough to be able to do this, feel comfortable enough trading this and managing risk and things like that. And once you're at that point, then yeah, definitely, I would say definitely try out for a funded account. So. All right. And it's kind of a slower moving market, obviously. A lot of it has to do with the fact that it's no news, right? End of trading day, but that's all we need. Like you can make money, you can make a living on 10 pips a day. Honestly, you can. You totally can. I mean, this trade alone on my other account, like I showed you, is up a couple $100. On my FTMO account, it's up a couple $100. And it's just up 3 or 4 pips right now, right? My goal with this trade would be to make, $500 to $1,000 today. And I think that's definitely possible. It's just going to take some time. But it's a really, really cool concept, right? All right, guys. So, yep, I hope that's helpful with the banker's close rules right here. So hopefully you guys can follow this. I think I will add just this link in the little rules here. Let me grab this. Use Maytaf to find the average daily range right there. And so that's what I would do if you had to leave the trade alone. Like if you had to walk away from the trade, go through that process of going to Maytaf, pull up the currency pair you're trading, find the day of the week that you're trading on, and then you'll see the average daily range for that day. divide that by 4, and that's going to be your stop loss, right? Perfect. All right, guys. So let's jump over to, okay, so a couple of things I want to do today. As obviously we want to make money on this trade, so we'll let this do its thing. For me, let's see, I would look to close, yeah, if we can get the market to come up and retest this area and this area, I'd probably close out of most of my trades. So let's just be mindful of that as we're working this trade this morning. But so far, so good. So far, so good. Couple of things I want to do. I want to look for some more, swing trade opportunities. I've been kind of on a low this week in terms of finding these. Like last week, I had a banger week. I think I recapped Friday last week. I made over $16,000 last week, which was absolutely insane. And just absolutely insane. It was super exciting. And, but this week has been a little bit slower. And I think maybe it has something to do with December being a slower month. And there just hasn't been a lot of higher time frame opportunities that I'm used to. And I think that has a lot to do with it. But part of it just might be just, and I just haven't been able to find really good opportunities. Like a lot of the opportunities I found have been duds, like they just never trigger type of thing, or I'm making some rookie mistakes on a few others. So I've been in the swing trading department. It's been a little rough in the last couple of days. But again, Friday last week, I guess last week was one of my best weeks. It was just absolutely insane, really awesome week. So anyway, what I want to do is get back on that. Let's get back out on that, start taking some real banger trades, get going. Real quickly, let's see. Jared says, good morning. Jay Hill's coming. Yes, it is a great morning. I saw that on KSL this morning. It looks like, I guess, local news here in Utah. We've got a new defensive coordinator coming to BYU, and I'm really excited about it because the guy that's coming has had a tremendous amount of success at another school as a head coach. And so I guess he's taken a step down in position, but he's moving up to, I would say, a better school, a much better school. So I'm looking forward to that. We've had a lot of BYU's had, you guys know I'm a BYU fan. We've had a lot of defensive woes recently. And so kind of exciting to see some really outstanding changes coming in that department. Jason says, had 3 trades trigger for $346 Euro Kiwi simulated account. That's awesome. Great work, Jason. Doesn't matter. Doesn't matter if it's simulated. The point is that you're making the moves. Like you're taking the trades that will move you in the right direction. And the more you can prove that to yourself that you can do this, no matter what strategy you're trading, whether it's the banker's close, some swing trading, the banker's candle strategy, using the COT report, whatever you're using, if you're finding that consistency and you're keeping that up, eventually that's going to turn into real money. It will, inevitably it will. You just have to keep up and show yourself that you can do this. Little side thought, I've been thinking about this a lot lately, especially for new traders. I've been trading for a long time, so I have to try to put myself in a new trader's mindset. And it's just something that I think, and honestly, it applies to me too, now that I've been doing this a little longer. But I think something that's super important, when I was new to trading, I would have a lot of really fun wins. I've got another friend of mine who's trading right now. He's had some really tremendous wins recently. Very quickly can tremendous wins turn into not tremendous losses, but well, yeah, I guess. You won't enjoy your wins as much if we don't learn how to manage risk, right? So like when I was new to trading, I'd wake up in the morning and I'd be like, wow, I made, overnight trading, I made 500 pips, I made 1,000 pips or something. I get really excited. And then the next morning I'd lose 2,000 pips or 1,000 pips or something. And then the excitement's totally gone, right? And so one of the things that I think is really important, especially in my job for helping you guys, is learning to manage risk, because what I want to do is help you guys. Like if you have a big win, we need to help you preserve that capital. Warren Buffett, I think, said something like to the effect of, rule number one is like don't lose, or don't lose capital. Rule number two is don't forget rule number one, right? And it's so true. Like if you make $10,000 trading, let's not lose that, right? It's okay if we have trades that are losing 500 or $1,000 on a win like that, and it's like, okay, but 3 or 4 trades down the road, if we lose, 3 or 4 trades in a row, but we have another $10,000 win, that's okay, right? So we have to work with that, if that makes sense. But anyway, just a thought I've had recently is, um, let's work together at having smaller losses, because I've been on the flip side of that, where I've taken some really big fat losses, and it's really hard to come back from those, because you'd have to have some really big wins in a row to come back, if that makes sense. So anyway, all right, guys. So let's talk about this. I'm looking for opportunities. Uh, what I like to do is, if I'm looking for like a swing trade opportunity, what I want to do is head out to kind of a higher time frame. Okay, so like if I'm looking at the USD franc, this is a trade that you guys and we took this a couple weeks ago. So here's the USD franc. Let's see, let me orient myself here. Yeah, here it is. So I don't know if you guys remember this, but this was a signal that we took, like we bought like right there on that wick, and we made almost $5,000 on this trade. Okay, on this move up right here. And this thing, just for context, had been just coming down like crazy. Look at this huge move down, just dramatic move down. Okay, terrible, 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 right? Well, I guess it's not terrible. We weren't in it, right? So that's fine. Um, so, but how do we know to buy right there? Right? You know how people tell you you can't time the market? Like there's no way you can time it. I think there is a way, and we've talked about this. I think there definitely is. Um, uh, Not necessarily to time the market every single time, but you guys, since we've been studying order blocks and we've been going into supply demand zones, there is a way to kind of know where the market's going to turn, right? There is a way. So for example, when you look at this chart here, how do we buy right there? Well, if you go back in time, look at this. This is back in April. This was a lot of structure that was formed, right? We had a nice support area right here, nice support and resistance. Okay. And then a massive breakout, huge breakout, right? What caused this huge breakout? That's the question you have to ask. Oh, okay, well, it was whatever this thing is right here. Whatever this is what caused the breakout. So, you kind of box that thing up right there. You're like, okay, whatever the market did here is what caused this break of structure, right? Here's the structure. It obviously was disrespected in a big way. What caused it? Whatever this is. So now you bring this over, you bring this box over here to where we're trading today. It's going to take a second. How do we know to buy right here? There it is. Look at that. Just tapped into the, just barely tapped into the box. And then the market was like rejection. And it actually looks like it's held that box so far. Look at this. It's come into it a little bit more, but it's still held its position down here. So this box is obviously a big deal. How would you have known that if you were looking at a 5-minute chart? How would you have known that if you were on a 15 1-minute chart? Like, let's say you're shorting this, you're using those EMA crossovers and the MACD and the RSI, and it's like, oh, it's a sell. You got to keep selling, like, because that's how those types of strategies and those like types of lagging indicators want to tell you is like, hey, this market's down. You should probably keep selling. But how would you have known that this was a massive order block right here? How would you have known that? Well, you have this, it's price action, right? Break of structure, price, simple stuff, right? Go back and check this out. You know, this is whatever caused this thing is what caused the breakout. You could, if you wanted to, you could include that little candlestick as well. I don't think you needed to. I guess it would have gotten you into this entry. There's another, it would have gotten you into this one back in August. Um, yeah, that would have been a great trade. Wow. But um, you don't necessarily need to. I was just counting this one right here, and that's what got us into that trade last a couple weeks ago. So what I want to do is find more trades like this because I've been doing this on smaller time frames and it works, but I would say I have a lot more success on the higher time frames looking for these types of setups. Um, I feel like these supply demand zones work way better when you're on the higher time frame, right? Where would be another great area? Like if this USD franc kept falling, like where would be another great area to buy? I would say, this is another point of structure right here. That's a nice support resistance zone. You can even see if I can, that right there. I've never used this ellipse. That's kind of cool. I'm figuring it out. There we go. This makes it support right there, right? And so that's structure. So where would be the most natural place to, where would the banks naturally be building their position? Well, whatever caused this great move right here. So this could be another really good area of, let's draw it out. This could be another really good area where the market may come and pause and then go back up. So it's just another thing too. Like if this thing just kept going down, where's the help? Right? It's the same thing we did on the banker's close today on a 5-minute chart. If that thing, it looks like it's come down just a little bit, but if it goes down a lot more, like 20 pips more, we've kind of figured out where those areas of help are. So that's kind of good. So yeah, that would be the next area where we'd find some help. I probably wouldn't buy anywhere in between, but I would be willing to buy inside the purple there. But obviously this one is held up like a champ. This one right here, it's been just absolutely fantastic. And that's what's just so cool, guys, is like you could literally do this analysis on a pair and find out, okay, well, this pair is right at a multi-month supply zone or demand zone and just scalp that guy for the rest of the day. That's kind of a trading plan that I'm working on that I want to develop because I think it would be one of the most powerful trading plans. Can you imagine doing this type of analysis? Think about this, guys, with this USD franc here. I know it's been in a downtrend, but knowing this context that you've got this very powerful demand zone down here, you could feel a lot of confidence. Like every time this market dips, you could have a lot of confidence knowing that that dip is just going to send the market higher. Look at this. This market came down to here initially and just immediately rejected, and it went 242 pips. And this happened on November 15th. And then this thing came back down. Didn't quite get to it, but nonetheless got rejected up here. It came down, tried a little harder this time, and look how quickly, look at that huge one single bar, boom. They were like, nope, this is a demand zone, we're sending it back up. And then it did it again and again. Now, to be honest, even though that's super great and awesome, Normally you want to see these markets come into these demand zones and just go up forever and ever. This one has taken its time, so that's actually not a good sign for the overall longer term outlook for the USD franc, which means it may actually it may break at some point now that the market's tapped into this demand multiple times now. That means orders have been satisfied, reconciliation has been made with that order block. And so the market may at some point just say, hey, I've made my reconciliation. This order block, every time the market taps into an order block, it becomes less and less useful. So remember that. You really do want to find these order blocks and be the first or second to them. Ideally, you want to be the first to it, because if you're the first to an order block, you're going to be very, very successful. Okay. I'm just putting that out there. Obviously, that was proof right here. If you're the first guy to it, which we were back in mid-November on this trade, we made $5,000 on that move right there. Can it work on a third or second or third time? Sure. Yeah, it came in here 2 other times. And yeah, there's 100 pips to be made on each other time that it's come into here. But what's cool, the big concept I'm trying to say is, like, if I were trading this, I would feel very comfortable as the buyer down here, because I know that there's a stash of gold right here that the banks are trying to prop up, right? So if, let's say I didn't buy at the most ideal time. Let's say I sold or I bought right, I don't know, here, and I'm drawn down 100 pips on a trade. Depending on what type of strategy I'm employing, you might be able to stay in that trade and just work your way back out of it, right? Because you've got support from a big bank or something like that. I wouldn't recommend that for every strategy is different, how you manage risk and what your stop loss looks like and stuff like that. So anyway, it's just something to think about. So I want to find more stuff like this on the hourly time frame, max 4-hour time frame, because here's my trading methodology. If we can find more stuff like that, where we've got this 1 hour, 2-hour time, 4-hour time frame supply demand zone that we're working with, can you imagine those insanely awesome scalp trades that you could make on the lower time frames, knowing that context? Like, the amount of money that could be made is just unreal. So that's what I'm working on next, is finding that kind of stuff. And so, but it's kind of hard work sometimes. Like, you have to go and look at these markets. For example, here's the Aussie CAD. I know this one's been flying high recently. It's been up and up and up. Where's this guy going to stop? And I think with this one, I haven't drawn out a zone because it's not as clear as the USD franc. Like, if you go back in time to the last time the market was up in this area, it's not extremely clear. Actually, no, this one is clear. This is the next demand supply zone right here. Right here. That is, I'll do the whole thing. That's fine. This is the next supply zone. So if the market comes and taps into this, yeah, you've got a really good chance of a pullback. I'm not saying an everlasting, like, 3-month, 6-month pullback. I'm just saying, like, an opportunity to scalp that thing down for a week. Yeah, that's available. Absolutely, that's available. Quick thing, guys. It looks like our trade's moving in our favor here. Let's see. Do we want to close anything? I don't know yet. I'm gonna, well, I should be responsible and close a couple of trades. Okay, I'm gonna close just a couple right there and be responsible, Steve. Fun fact over here, I do have this. It's just fun to see. I'm up $430 on this trade. I'm going to close a couple, and I'm going to let the rest ride just a little bit. But it's just really fun to see that. Just trusty little banker's close trade, right? Just so cool. Trusty little. I think I'm gonna call it, the nickname, we'll call it the retirement trade. Oh, I was gonna tell you why I was gonna call it the retirement trade. So reason why it's the retirement trade, because it's so convenient. Like, if you're retired, you can still sleep in, right? Like, you can still relax. You can casually get up, especially if you live on the East Coast. This thing's going to start at 11 a.m. Like that's just totally fine. You can start at 11 a.m. You're done by 12 p.m. If you have to leave the trade, you can set it up once you've got your trigger. You can put in your stop losses. You can go through that method of the stop loss that I showed you earlier. And you can literally walk away and you still have time to golf and you still have time to do whatever, go to the store, run some errands, go see that choir concert, Christmas choir concert for your grandkid. Like all of that is still possible with this trade. Um, and it's just something that like is consistent. You master the rules, you get a feel for it, you trade it enough times, you've got that familiarity with the strategy. Anyway, I just think it's just perfect for somebody that's looking to retire. Like it's just trusty little bankers close trade. And when I say little, like again, like we just made, well, now it's still going up. Like I closed two trades just barely for $85 each. Two trades at 80, so that's $170. And I'm currently up $250 on my last three trades. So, this is nearly $500 so far on just that little trade. And then I also traded the banker's close of Sydney last night. So you can trade the banker's close for different sessions. So I stayed up last night trading the Sydney banker's close, and I can show you, I made, it's not as much because the volatility is not as high, but like, well, actually, because I left a couple of trades to ride, and I did make another like $500 or $600 on that trade last night because I basically took the trade, I let it do its thing. I made some money, put my stop losses at break even, and then I went to bed. And when I woke up, I had a trade that was up $263, and I had another trade that was up $182. So I mean, so yeah, it's very possible. That's all I'm saying. It's very possible to make quite a good return with this. Okay, now I've got each trade up. This is fun, guys. Look at this. Each trade is up over $100 now. I'll probably close one more. And just let it continue to do its thing on those last two. Let me see, how are we doing over here? Yeah, I'll just close one more and I'll leave the rest here to do its thing. Okay. Back to this, guys. So anyway, it's just so fun. I love that little banker's close trade. It doesn't, like, we talk about these types of trades that we're looking at here with these looking for supply demand zones. Yes, you can make $5,000 on a trade. Absolutely. Like it's totally, we've done it multiple times this last month. It's not the type of thing that I feel like I get those every day though. It's more like, hey, I've got this other system where it's very reliable in a higher time frame, especially if you're the first to catch it, where you can grab, you know, several thousands of dollars in a trade. And so that's kind of my trading plan is like, hey, I do really well. I don't do really well. I've just noticed, me personally, I'm not very good at trading supply demand zones on a smaller time frame. I'm just not as good or proficient at it. So I'm trying, but I'm really good at trading supply demand zones on these hourly or 4 hour time frames. But those opportunities, like maybe once a week, twice a week, you can get some really solid setups. So my trading plan is kind of this, like bankers close, obviously every day. I trade the London without fail, like every single day. If I'm up late, I might trade the Sydney or the Tokyo close because I can, and I know how to trade those. Um, but then at the same time, I'm doing this type of trading to try to get some of those bigger home run wins that happen a couple times a week, but not every single day, right? So, and these home run wins do happen on smaller time frames every single day, but again, I just feel like I'm not as good as at those ones as I am on the higher time frame. Now, again, why? Let me just talk about this right here. Why did I draw out this zone on the Aussie CAD? Why is this a zone that matters? We've seen this one a couple of times now. It just hasn't gotten there yet. Why is this a great zone? This is a great zone in my opinion because right around here you can see how these candlesticks are very well like lined up. They're right together. That's a consolidation zone. Look what happened when that thing was done. Boom. Absolute crushing of the market right there. right, into this next zone, and then it continued even lower. So this is a supply zone. If the market were to tap into this, you'd get a really great trade. So if we pull this over, let's see, I don't even know if the market has tapped into this. Let's see. If it has, then it's not as good, but it's still worthwhile. You really do want to try to be the first guy to these zones if you can. Okay. Because yeah, and we're going to take a lot of pending orders, and a lot of them just won't trigger. It's just the way it works, right? Wow, this is pretty far. It was a long time ago, the last time the market was up here. It really was. Okay, has it tapped in? It got close. Look how close that was. See, when you know we're doing something right when you see that, right? Like that's, the market's thinking like, wow, like that is how do we break above that? Why did the market come all the way up to here and then stop? It's because there's a mountain of supply inside that purple box. So much supply in there. That's why and that's another thing too. If you're trading this, if you're selling it or something like that, I don't know, or buying, doesn't matter. If you know that that's up there, that helps you determine where stop losses go. That helps you determine where take profits go and things like that, because you know where those supply demand zones are, right? And just for the record, for everyone that's new, this is supply when it's above the current price of the market. It's supply because that's where, if the market tapped into that, that would cause the market to go down, because there's a lot of orders up there available to send the market lower. The types of orders that are up there will send the market lower. Okay. When it's demand, it's below the current price of the market, because the types of orders in a demand box, people demand the market. They want more of it. So it sends the market higher. That's why it's called demand. Okay. So yeah, if this is an area for me, if I saw the Aussie CAD tap into this, I'd be looking for sell scalps. I'd be looking for opportunities to sell. Okay. So we might do that. I might actually place a trade here, or maybe inside of it, somewhere in here, looking for sell opportunities. But this whole thing is a supply box. But yeah, it's just something that I'm watching and paying attention to. Anyway, let's move on. I am looking for a lot of opportunities. Stuff like this I ignore because it's not reaching a new high, a monthly high, or a monthly low. So I just move on to the next pair. I'm really looking for stuff that's tapping into those zones. Like for example, with this Aussie yen, let's see, this was an area down here. Oh yeah, I remember this trade. So this was a demand area, because back here, this market, pretty much all of this is demand, right? Look how quickly the market went back up from there. I think some people will draw it out like this. I don't know if that would work. Let's see. Anyway, I don't need to spend my time on this one as much, but yeah, it looks like it tapped into it just barely. Yeah, there it did. It tapped into it just right there and then went up. But why did it tap into here in the first place? You can already see it, right? Whatever this thing was caused this huge move. And actually, before I say that, um, what caused the break of structure? That's the key. I always got to remember to share that piece, because it's a huge piece of information that's important for you guys to understand. When the market breaks structure, which this was right here, an obvious point of structure, what caused the break of that? This guy. Okay, that's where demand is going to be in the future. So now if we draw this forward, now that we know that that's going to be where demand is, look what happens. It taps into it. Look at that. Just amazing. Taps into it. That's why I want to trade the higher time frames, guys. This doesn't happen every day, but when it does, you can buy yourself a new truck. I'm not kidding. We've had trades like that. I guess I couldn't buy a truck with $5,000, but that's a down payment on a truck. Or $5,000 is a new car. Maybe not the newest car, but yeah, it's like you can buy a sturdy car for $5,000. Don't tell me you can't. Like I can help you find a sturdy car for $5,000. But yeah, that's the price of a car right there, you know. But yeah, the opportunities are limited. Like that didn't happen all the time, but like that is just so golden, right? How would you have known to be there? Well, you just have to have your orders in place. Like you have to have your limit order in place. And look at the time when that happened too. 7 a.m. GMT. So that's 3 a.m. Eastern. So you're not going to be up for that, let alone that opportunity is so limited. And it happens in the middle of the night. Like you're just going to have to learn to work with limit orders. And that's fine. We all can do that. Anyway, so where is it going next? I honestly don't know, but like you could draw this out as a reminder. It's only tapped into this area one time. So I do believe, if the Aussie yen came back into here, um, I think since it's only tapped into it once and it barely tapped into it and it was very quick, I think that this could be used once or twice more. So I might actually put another buy right there. And this could happen any day. Like this could come down 100 pips and tap into it, and then you get a nice little trade out of it. So that's going to be my job, is to go in here and look for some of these opportunities and set them up with you guys. Yeah, but I wouldn't place any. I don't know if I'd place any sell orders, because I mean you could technically. There are some supply demand zones up here. I just like the really obvious ones, the ones that I'm like, yep, that's one right there. Because you could argue that this is a supply demand zone right here, but I don't know if I would. This just seems so obvious. Like, hey, I have a break of structure. What caused it? This thing. Okay, great. That's where my trade's gonna go. Boom, market taps into it and it's gone. Look how far this went, just for kicks and giggles. Like, how far did this thing go? From its low here, that's 847 pips. It took a month or two, right? Anyway, so I'm just looking for more of those. I'll have to post those. Okay, it looks like this one, for example, this Aussie Kiwi has been flying down recently for good reason. Like the COT report indicates that this thing is just supposed to continue lower. I don't know how much lower this will go, but I mean, how would you know? Like, let's say we were trying to predict how far this thing's going to go down. Let's put a line right there. Let's go back in the past. When was the last time the market was over here? Okay, first of all, where's the break of structure? Okay, where is structure? I would say there's a couple. Like, honestly, this is your break right here. This is your resistance area. What caused it? There's a couple. It's not as obvious on this one as, say, the Aussie yen we were looking at and the dollar franc we were looking at, but there are a couple of main areas. I would say that this is a supply demand area right here. And then I would also say that technically this is a supply demand area. So these would be areas where I would be interested in buying on the Aussie Kiwi based off of what I'm seeing on this here. So now that we can draw these over, let's see if the market's close or it has been to these areas already. And then I'll wrap up. I know we're getting to the top of the hour, but this is so fun. Like, I really have a lot of fun teaching you guys this, because I took finance classes, and people always said, you can't time the market. You can't do that. You can't time the market. Oh my gosh, they just didn't know about this. Like, and I'm not saying you can time it every time, but yeah, like, okay, look, we haven't tapped into this yet. So this is definitely a trade I'm going to post. Like, we haven't tapped into this yet. So look how close we are though. Like this area right here, is 50 pips away. If we hit that, I would be willing to buy. And all you're looking for is just something like this. Like you're looking for that kind of like just 100 pip move, right? You're just looking for this to come down to here, and then boom, you're just looking for, 100, 150, 200 pip move out of that, and that's your call. I'd probably look at the next supply demand zone, which would be like right here, perhaps. I probably would buy here, target somewhere up here, and be done. Um, that's the trade, right? So yeah, definitely I'm going to post this one. I didn't realize that we were that close, and we haven't tapped into this yet. And again, why did I like this? Again, this is the break of structure right here. Especially the breaks of this double top. What caused that break of the double top? Well, technically they did something right here that caused that break, and then the market just kind of went up for a while after that. Not in a big way, not like an immediate move, but sure, like it moved up from there on out and never came back. So that would be an area of interest. And then yes, this technically this and really just like this whole thing right here is a demand zone. So yeah, we will want to get some trades on here posted. I'll get those posted on my own. But remember, these are the types of trades where, yes, you can make quite a bit of money on them, but they don't happen every day. So when they happen, let's definitely seize the day and take advantage of it. As far as our bankers close trade goes, I'm glad we pulled out some of our profits because it's basically back to the break even. I'm going to let these ride just a little bit longer. I may close them. I'll let you guys know what I decide to do with them. But either way, we've already made some good money with this. Like if you look at like my order history over here, I have I guess I closed 3 trades out, one for almost $100, two for 86 or $85 a piece. So that's almost $300 in itself. What is it actually? I think it's like 265, $260. And then I do have these trades that are up just a, in fact, I think I will close those because then I can say I made almost $500 on this trade today. So I'm going to close that one. And then, yeah, I probably will just close the rest of those out. Yeah. And then we can just be done for the day. So, and actually just for fun, if you want to hang out with me, I just want to just show you guys the power of this. Like if you're trading the banker's close, how much did we make actually today on the banker's close trade using an FTMO account, right? You've got the true trades that just closed 36.58 plus 40.24 plus $94. That's my biggest 1.98 plus $86.44 plus $85.21. Did I count them all? Let's see, 1, 2, 3. Yeah, I got okay. So I didn't make four. I made $343, which is still that's still a good day, guys. Like I obviously would have liked to have made more on that, but I'm not complaining. That's good. I'm happy with it. And I will get more of these posted out this afternoon. That's on my to-do list is to get more of these hourly supply demand zones set up, stop losses in, targets in, and then you guys can take these. But real thing to be clear on real quick as we wrap up here. Don't be frustrated when most of these don't trigger. I'm just giving you fair warning right now. Most of these won't trigger, or if they do, it's going to take days, maybe sometimes weeks to actually hit an entry. But when we do, these should be absolutely outstanding trades. I still want you to figure out your risk. Like say, okay, Steve's got a trade on here. Here's his box. This is still 40 pips of loss. Like ask yourself, okay, how big can my lot size be if Steve's risking 40 pips? Okay, and he's going for 150 pips. That's awesome. Okay, what's my profit going to be on the other side of that too, right? Like do that calculation on your own. I cannot tell you what lot size to use. I'm not allowed to do that to tell you what lot size. I can just give you pointers and just say like hypotheticals of, oh, this is what I would do if it were my account, but you ultimately have to do what you want to do with that trade. So all right, guys, it was awesome. Thanks for coming. I'm excited to get some of these trades out today. Awesome day with the bankers close. And we got caught report tonight if you guys want to come to that. Other than that, thanks for coming, guys, and we'll see you tomorrow.